All right, let's talk about Carvana. I mean, what a story. One minute, they're this incredible Wall Street darling, the comeback kid. And then, bam, the stock is in total freefall. We're going to dive into a story here that's got everything: shocking accusations, a powerful family, and a $1 billion question right at the center of it all. So you got to start with the comeback, right? Because it was absolutely legendary. Seriously, picture this: a company that's basically knocking on bankruptcy's door. Its stock is worth less than a cup of coffee, and then, just a few years later, it skyrockets. We're talking a mind-blowing 10,000%. That was the Carvana story everyone was talking about. And then, January 28th, 2026, the music just stopped. The stock plummeted, dropping over 20% in a single day. Poof, all its gains for the entire year just gone. And you can bet investors were all asking the exact same thing: what on earth just happened? Well, the answer didn't come from some boring old SEC filing or a typical analyst note. Nope, it came from a total bombshell report, and it was published by a really specific type of investor, a short seller. So what exactly is a short seller? Basically, think of them as professional doubters. Their whole job is to find cracks in a company's story. They bet that the stock is going to go down, and then they publish this detailed research to try and prove they're right. It's pretty controversial, but it's a huge force in the market. Because if they're right, they make money when the company stumbles. The folks behind this particular report, a firm called Gotham City Research. And listen, they weren't just saying the stock was a little overpriced. No way. They were making these incredibly serious claims that went right for the jugular, attacking the very foundation of Carvana's amazing comeback story. Okay, so here's the heart of it. Gotham City basically said that Carvana's incredible recovery wasn't real. They claimed the company's biggest shareholder was playing games, using his other companies to pump up Carvana's profits and, you guessed it, make himself a whole lot richer in the process. And they didn't just make a vague claim. They put a number on it, a huge one. The report alleged that between 2023 and 2024, Carvana had overstated its profits by $1 billion. $1 billion. Now, to really get your head around how massive that number is, just look at this. In that same period, Carvana's actual reported net income was only about $550 million. So Gotham wasn't just saying they fudged the numbers a little bit, they were claiming the fake profits were almost double the real ones. That's a huge deal. So you're probably wondering, how could a company just invent $1 billion in profit? Well, to get Gotham's argument, you really have to look at the web of companies all connected to Carvana. And it turns out it's all in the family. It all comes down to the Garcia family. You've got the son, Ernest Garcia III. He's the CEO of Carvana. Okay. But then you have his dad, Ernest Garcia II. He's the biggest shareholder, but he also owns these other two companies, DriveTime and BridgeCrest. And the accusation is that Carvana was doing deals with dad's companies at pumped-up prices, all to make its own numbers look way better than they actually were. For any investor, that is a giant red flag. It just screams conflict of interest and makes you wonder what the real financial picture looks like. To really get this, you have to look at the journey this company has been on, because this isn't exactly the first time Carvana's been in the hot seat. Its whole history has been one wild roller coaster ride. We're talking incredible highs and some really scary lows. I mean, check out this timeline. Late 2022, they are staring bankruptcy right in the face. A year later, they've pulled off this incredible turnaround. By the end of 2025, they get added to the S&P 500. That's the big leagues. And it was that crazy fast rise that made Carvana a Wall Street legend, but it also painted a giant target on its back. And here's something you really need to know. Gotham City wasn't the first to cry foul. Oh no. Other big-name short sellers, guys like Hindenburg Research and the famous Jim Chanos, they'd already been raising red flags about Carvana's accounting, calling it aggressive and, frankly, just confusing. So all of this leaves everyone, the market, investors, you and me, with two totally different stories about Carvana, right? Is this a genuine feel-good success story, or is it all just smoke and mirrors? In one corner, you have Carvana's version of events, a historic turnaround, pulled off with smart cuts and clever deals. And in the other corner, you have the short seller's claim that the whole thing's an illusion, just an accounting trick, a house of cards waiting to collapse. Now, Carvana, you can bet they didn't take this lying down. They came out swinging. They called the report flat out, inaccurate, and intentionally misleading. They're insisting that every deal they did with those family-owned companies was totally by the book. all properly disclosed right there in their financial statements, just like the rules say. And so that's where we are. You've got this legendary stock run followed by a brutal crash. And it all leaves this one massive billion-dollar question hanging in the air. Is Carvana's comeback story real? Or is it the biggest illusion on Wall Street? The answer to that question is going to decide everything for this company.